It gives me great pleasure to welcome now Jeremy Allaire. Jeremy is the co-founder, CEO, and chairman of Circle. A round of applause, please, Jeremy. Thank you so much. Brett Harrison, he's the president of FTX US. Welcome. And he has it very helpfully on your top, so we'll never forget. Yep. And Michael Sonnenshein, CEO of Grayscale Investments. Michael, a round of applause for you too. Thank you. Michael wins the award for the most dashing socks. I don't know if you can spot them.
Hey, come on.
Ooh, polka dots.
I know, Jeremy, you usually look, you've got great socks there, but you need to up your game, I think, a little bit if you want to compete with Michael. Right. So I think it's fair enough in saying most of us are relatively green. I am very green when it comes to the world of cryptocurrencies in terms of investing as well. So, Jeremy, let's kick off by just, if you can tell us where you fit in to the kind of cryptocurrency ecosystem in terms of Circle. I understand you help digital money move and you have your own coin as well.
Yeah, sure. We've been at this for about 9 years, but really the kind of core of what we focus on is how can we take what we think of as traditional money, like liabilities of a central bank, dollars in this instance, and kind of give it what I like to describe as the superpowers of cryptocurrency. So the ability to transact with it anywhere in the world, very, very, very fast, very inexpensive, to be able to settle the transaction without taking counterparty risk. So you can kind of move these digital dollars really easily. So our focus is really what we call stablecoin market infrastructure. Okay. It's a mouthful, but it's basically building that infrastructure for dollars on the internet, and that's useful for many, many different types of applications that need dollars on the internet. And so it's kind of a building block for other areas in the digital asset market.
Okay, good stuff. Brett, thanks so much. You run a cryptocurrency exchange, is that correct?
That's correct, yes.
Tell us more about it.
Sure. So FTX US is a licensed and regulated cryptocurrency and cryptocurrency derivatives exchange in the United States. And exchanges really play the role of bridging the world of traditional finance to decentralized finance. We are the place where people can deposit fiat money, but also cryptocurrencies to be able to transact and exchange them for other assets. It's a place for price discovery. We match buyers and sellers in a variety of assets. And we are continuing to play a role in bringing more assets to the public, getting more retail and institutional interest in getting into crypto, and providing, for example, services like allowing merchants to be able to accept cryptocurrency as payments.
Okay, and we're going to make this as jargon-free as possible for my benefit more than anyone else's. So fiat currencies being legacy currencies.
Exactly. Actual dollars, pounds, yen. Good. These are the kinds that we can accept through our connections with banks.
Thank you for helping me with that one. So, and Michael, you run a digital currency asset management, one of the biggest, is that right?
Yes. Yeah, so I'm the CEO of Grayscale Investments. We were a tiny bit behind Jeremy. We've been at this for about 8 years. And really our mission has been to make investing in cryptocurrency as accessible as possible. So a lot of investors access financial markets through stocks, bonds, ETFs, mutual funds, and crypto by and large was born out of a system that is disparate from that. And so we have created a family of investment products so that investors can access cryptocurrency through traditional means and structures that they know and that they use in order to add it to their portfolios, retirement accounts, et cetera. And we are now the largest crypto asset manager in the world, about $30 billion of assets under management.
Congratulations for that. Now, I know this is your first Davos.
It is.
Is that right? You both been here before?
My first.
Oh, wow.
I've been here before.
Yeah, I was going to say, I'm sure you've been here many times before. I remember 2 years ago, people were talking about cryptocurrencies. And of course, it is here to stay because you're all doing very well. But it's also everywhere, isn't it? So are we about to break into the mainstream? Where are we in terms of cryptocurrencies and the kind of the chat around it right now? Jeremy, where would you want to start?
Yeah, I mean, there's this concept of like a technology adoption life cycle curve, right? And you've seen these charts, right? How long does it take for a new technology to reach like a billion?
We were just talking about that, yeah.
Or what have you, and there's also this concept of a kind of, it's like a bell curve, right? You have the early adopters, then you have what you call the chasm, which is like if a technology can cross the chasm from that early adopter to what's called the early majority, that's where you get the like super steep growth. So I think we're like standing right on the precipice of the chasm. There's some things falling in the chasm, and that's going to happen, but there's going to be some things that get across the chasm. and that are going to get to 1 billion people. And I think we're probably going to see that over the next couple of years. And so I think what you see here with certainly firms like ours and the amount of capital and intellectual property development and others is very much the foundations for that early majority. And people estimate 100 to 200 million people in the world. That might be low, but some number of people who have access to or used crypto in some way, that's still pretty small. And so we need to get to like 1 billion people who are using this. And eventually they'll be using it. They won't even know that they're using it, just like you don't know what protocols you're using when you interact with Google. And so I think that's kind of where I think we are.
Okay, would you agree, Brett?
Yeah, I completely agree. In many ways, I feel like we've already hit mainstream, at least in the dialogue. It's hard to walk anywhere without someone talking about crypto. I mean, even on the promenade here, how many different crypto companies have fronts here at Davos? As Jeremy said, we have clearly over 100 million people with crypto accounts. And while it might be a small number with regards to sort of the total global populace, that's still quite a large number of people who are already interacting with crypto. So it's definitely here to stay. I think we're maybe, if not already in mainstream, we're very close.
Just a quick show of hands for our audience. Anyone already investing in crypto or have experienced it? It's like, oh, actually, there you go.
Would you keep your hand raised if you had an easy time buying crypto? Okay.
Are you surprised? Half, I would say.
I just think one of the big things that we're all working on is making crypto more accessible, right? And whether that's asset management, exchanges, stable coins, the plumbing in the infrastructure is so critical to getting those next hundreds of millions of investors and users around the world into the crypto ecosystem. And whether they're doing it overtly, or to Jeremy's point, that they're undertaking some kind of application or process and not even knowing that crypto is running it in the background. It's really that plumbing, that infrastructure that I think we're also committed to.
Okay, Jeremy, you mentioned a chasm. So we have to just talk about the last few weeks because we have seen, I think is it a cool $1 trillion marked white off the sector in the last recent weeks. Of course, we've seen stock markets as well tumbling. In actual fact, many assets around the world have been tumbling as well. Of course, we've seen the collapse of the cryptocurrency Terra USD. Did you see this coming? I mean, I know you've been talking about it at length. What are your thoughts on it?
Yeah, I mean, we absolutely saw it coming. Our own analysis. Yeah, I mean, I do podcasts and people ask me questions about it over the past 6 months. I would happily share my views. I think, our own kind of analytics, you just look at the basis of what it was. It was essentially a subsidized arrangement and the subsidies are running out. And so at some point if connected to a general sell-off, which is what happened, like equities are selling off, Bitcoin is selling off, when you combine those together, that's when you got that kind of conflagration. I think the thing that surprised me was basically how fast the death spiral occurred. Like I've never seen anything like that in my entire career. Like a fast rising competitor, because it was in this quote unquote stablecoin space, literally gone in 72 hours, just completely off the face of the earth, essentially. I've just never seen anything like that. But it's ended up being, I think, extremely strengthening for the stablecoins like USDC that are designed as actual dollar digital currencies that are fully reserved and regulated. And so it's really been a testament to how to do things right and versus how to do things that are kind of insane.
Yeah. And I mean, nevertheless, it must knock investor confidence somewhere or other, or not? You don't think so?
I think Jeremy's use of the word strengthen is spot on. I think as an investor, people are telling us that events like these are causing them to evaluate stable coins and ensure that they're functioning the way that they've been designed to do, and that the appropriate governance structures are in place. And so, as we've seen before, and unfortunately we'll probably see again, protocols and applications will come and go, but each time the system gets stress tested, we do see it demonstrate its resiliency, and the ecosystem ends up being stronger as a result of it.
And Brett, what would you say? Because I believe it was listed on your parent company, FTX, not FTX US. What responsibility, what role should exchanges play when things like this happen?
Sure, absolutely. So yeah, we do not list Terra assets like Luna or UST on FTX US. They were listed on FTX.com, as they were in pretty much every major global exchange. It's difficult because as exchanges, we have a duty to make sure that the underlying assets are legit assets. And after all, I mean, the code for UST was completely open source. This was a completely known entity for what they were doing. It was very clear when they were, for example, buying volatile assets to be able to subsidize the stability of UST. But on the other hand, we need to make sure that we're not picking winners and losers as an exchange. And I think the tricky thing here is, although it will be the case that the dropping off of these sort of riskier assets will strengthen the community over time, in the short term, what happens is people sort of associate what happens with UST with all crypto. What does this mean for all stablecoins, even if an algorithmic stablecoin isn't a stablecoin at all? And so it muddies the waters a lot in terms of investor confidence in the short term, but I think over the long term, it'll be good.
That's a good point, isn't it, Jeremy? Because I know you talked, I watched a fascinating video that you did about kind of where it all began from the 2008 crisis and trying to create a financial system that was risk-free. But of course, there can be runs, and investing in crypto is not without risk.
Yeah, I mean, absolutely, and one has to really differentiate between all the different types of crypto assets. I mean, I think for us, at least philosophically, there is an anchoring in sort of sound money philosophy, and I think we believe in a kind of model of what we describe as kind of full reserve banking, which is that you can have a fully reserved dollar that people can depend on and transact with. And you don't have to worry about runs on the bank. I mean, the challenge with dollars in a bank account is that the banks are making loans, and the loans can go bad, and so you have over leverage, and you have financial crises that occur from that, and we've seen that repeated over and over again. I think we're interested in seeing a model which is on the underlying fiat, as we call it, is on a more sound foundation. But obviously, that's very different than other types of crypto commodities that really behave more like commodities that are traded and have stored value assets or utility to them. And one has to really clearly differentiate between these kind of commodity and utility assets versus something that really is designed to be a unit of account in everyday commerce and transactions.
So how do you differentiate? I don't know who wants to answer that, because there are so many different types and terminologies. I mean, for an investor, how do they work out where the risk is and how much risk they want to take on? Michael, Brett, I don't know if you want to start with that one, Michael.
I think what we're starting to see is there's certainly been, as time has gone on and crypto has solidified its staying power, investors have really begun to focus on and have focused on having a core position in some of the largest assets out there, Bitcoin and Ethereum in most cases. What's been happening is as more and more protocols have come into play, you've either been seeing investors glom onto use cases, development activity, real-world applications, and/or its ability to affect other investments that they may have in their portfolio. And what's been fascinating from our perspective is that it's now become less about individual assets and more so that investors are beginning to group subcategories or sub-themes of the crypto ecosystem. DeFi, smart contracts, privacy, you name it, and almost doing so in a way that they do so with equities, financials, healthcare, tech, energy. And so as we're seeing investors build their crypto portfolios, it's often now being expressed through these sub-themes or subcategories.
Right, you're nodding. You want to come in?
Yeah, I completely agree. I think one thing that's important as an exchange is that when people come to trade assets, to invest in assets, to buy their first any kind of token on the exchange, they want to see information and disclosure about what are these different tokens. Is it a governance token? Is it a protocol token? Is it an NFT? Is it some kind of utility? Is it just a stable coin? What are these different assets? And investors are getting smarter about knowing which kinds of categories they want to be able to invest in, which are riskier, which are based more on the activities of the developers underlying the system. And that's been helping to differentiate this large growing class of tokenized assets.
I think there's 19,000 tracked digital assets, aren't there?
Sure.
Versus 190 fiat assets, as we now know what fiat is. That's insane.
Well, you think about how many equities there are in the world.
Yeah.
How many private companies have stock? How many millions of companies there's stock in those companies? So the number of financial assets in the world is actually probably pretty radically far exceeds the number of crypto assets today.
Yes.
So what's listed on the New York Stock Exchange or is a smaller subset, the Russell 2000, for example, of small businesses or smaller enterprises, right? So I think that's really the comp. It's not currencies. one of I think shared investor here who's frequently at Davos, Glenn Hutchins. He was making the point yesterday that the phrase cryptocurrency is really problematic because
What should it be?
I mean, people talk about crypto assets. I think that's a better generic phrase because there are different types of assets, right? A commodity like oil is an asset. A share of Apple is an asset. Ownership in an LLC is an asset. So these are all different types of assets, crypto assets. Crypto is just a way of representing assets in a digital token. Okay. And so I think cryptocurrency just, it confuses people.
Totally.
Yeah.
But do you think that number will get whittled down, the 19,000 traded?
I would say they're going to go in both directions. There are going to be assets that are around today that won't exist in a couple years because they will be worthless. They'll go to zero.
Yeah.
And there will also be an explosion of new kinds of assets. So here's an example. So we say there's around 10,000 or so US stocks listed on between NYSE and NASDAQ in the US. There's around 100,000 bonds out there for corporate bonds, around 1 million US options on equities. So we might see the tokenization of traditional assets. Maybe there'll be tokenized stocks, tokenized bonds or fixed income instruments, in which case the number of tokens will increase. But that's going to be hand in hand with the increase of the different utilities for these kinds of tokens.
Okay.
I was just going to echo that. I have the tokenization of everything thesis, and without getting too nuanced about it, digital tokens are a really powerful way to do record keeping on the internet about whether it's a financial asset or a piece of information or your identity or so many things. And some of these will be tradable and exchangeable. And so my view is we'll see millions and millions, if not tens of millions of these digital tokens. Now, whether those are things that people are treating like stock picking is a different question. But I think clearly this is an infrastructure that will be handling a radically larger number of assets.
If Facebook turns every user profile into an NFT, there might be 1 billion tokens.
Right.
So we'll have to sort of see how these develop.
Gosh. I mean, it's moving so fast. It sounds almost impossible to catch up, doesn't it? And let's talk about regulation. And is regulation catching up, Michael?
It depends where in the world you're asking the question. As an American company, we feel that working proactively with US regulators has certainly served us well to be an educational partner over the last 8 years. But unfortunately, regulators are in a tough position where the crypto ecosystem continues to innovate and outpace the ability for regulators to keep up with it. We're constantly building new use cases, new attributes, new features.
So how do you solve that?
Well, we have to work together. That's the beginning of it. Recently in the U.S., the White House put out an executive order, calling into action all the federal agencies to really start developing their strategy around this. You saw a similar statement from the U.K. Where they also want to keep the U.K. being a hub of crypto innovation. But really, when you start going around the world, you have different tolerances between different regimes and how they're treating crypto, and some of them unfortunately flip-flop between accommodative and prohibitive. That being said, I think we feel strongly as an industry and as an industry participant that we must have new rules and new regulations that simply relying on existing frameworks for assets that continue to evolve the way that they do in our ecosystem, that there just aren't the appropriate frameworks for them today. So we must work proactively with regulators to develop these new frameworks.
You're nodding in agreement,
Yes,
Brett?
absolutely. I think we've had difficulties on both sides between our industry participants and also the roles of policymakers and regulators on the rhetoric about digital assets. On one side, some of our industry cohorts saying there should be no regulation at all. And on the other side, saying that we should basically ban this. America doesn't need this. These things are worthless. I think by companies like ours going in to Washington, talking with regulators and policymakers directly and actually having proactive and cooperative discussions on why are these assets important? Why does America need to be, for example, a place where we foster innovation while having responsible regulation? These are all very important. I think in order for regulation to develop properly and for us to be optimistic about it, we need to not let perfect be the enemy of good, because we're never going to write one bill that's going to encompass stablecoins and digital commodities and digital securities and NFTs and everything that could possibly develop during the 2 years it would take to get such a bill passed. We have to start with, okay, let's get a simple stablecoin auditing bill passed. Let's talk about digital asset exchanges and make sure there's a proper licensing regime for them. Let's make sure there's a proper token listing regime in the United States, for example. And these kinds of things would go a very long way towards establishing good regulation for crypto assets.
What are you looking for? Because you've been to the Senate.
Yeah, I've been going up to Capitol Hill for 9 years. So I concur a lot with what's been shared. I have two high-level comments. I agree. The idea of very focused, get very focused legislation done. Stablecoin Act is a really key piece of that. Good news is, both sides of Congress in the United States are very clear. They want to work on this. Other jurisdictions, very clear. You just saw, the UK is going to have integrate stablecoins as a legal form of payment into the UK system. That's really important. So getting some very foundational things done is really critical. Zooming out, though, I think we're at a really pivotal moment, and I think the executive order is representative of this, which is that, to your point, the infrastructure is changing so fast. It reminds me a lot of, mid-1990s and mid to late 1990s. The development of the commercialization of the internet was moving incredibly fast, and the White House at the time, the Clinton administration, I think very clearly saw that they could not predict everything that was going to happen. It was very clear they wanted the United States to be a center of innovation for companies and technology companies, but they wanted a level playing field. And so they passed some broad legislation that created a level playing field, paved the way for an enormous amount of innovation over the subsequent 10 years, I think set the United States up to be the center of technology innovation in the internet. And blockchains and crypto are a new infrastructure layer of the internet. This is not just about financial applications, it's about a ton of other things. And so I think it's really critical that there's not a race to try and put things in too many specific boxes. Deal with the fundamental risks that are very obvious to everyone and get some clear things done there. But I think there's just so much innovation that's going to happen. And I think countries around the world are seeing that. And there's competition among countries now to figure out how to make this work, deal with the basic risks, but allow the industry to develop. And I think you'll see, over time, just like the internet is part of every company here at Davos, I think this technology will be part of every company here at Davos in the next 5 to 10 years.
Oh, wow. Then that's a big statement.
I have no doubt about it.
Okay. Good. Very, very confident. Well, let's talk about the future, and this is the exciting bit, isn't it? Because Michael, I think actually I got this from your website this morning. You say that digital currencies or digital assets can revolutionize legacy, economic, political, and social systems. I mean, that's a really strong statement, isn't it? What is your vision?
How much time do we have? I think that a lot of the not just underpinnings, but also the kind of on the surface of crypto is, really trying to call into question how we can move towards a more inclusive, more equitable financial system, right? And that then has parallels into our political processes, that has parallels into accessibility, financial literacy. And so as we think about the advent of this technology, the staying power that it's clearly demonstrated, and not to mention resiliency, like Jeremy is saying, we do feel very much like we are on the precipice of some major fundamental shifts, not only just in demographics, but also in the face of everything that's going on in the world with rising rates, war, hyperinflation in countless countries around the world. It's calling into question, things like, what is money? Is it just what governments decide it is, or is it in fact what society dictates it is? And so as we think about the applications here, they're virtually limitless, and they will cut across, to Jeremy's point, healthcare, politics, loyalty, rewards, financial applications, remittances, the list goes on and on. But it's early days, and I do hope that everyone, and particularly those attending Davos, have the opportunity to really be patient and watch this ecosystem continue to develop.
I think it's worth I think when you step back and think about, comparable transformations, right? 10, 20 years ago, to say that you'd just download a piece of software onto a device in your pocket, and it would organize billions of people in the world would then be communicating and sharing their information, and culture would flow through this, and the whole world would be kind of coming together on these new, just a piece of software, just a messaging app or whatever it is. That would have been absurd, but that rewired the way the planet's operating in the world of information and communication. Or if you had said, like, all of the world's knowledge would be instantly accessible at no cost, and it would be an infinite supply of all the world's knowledge, and it would just be free to everyone in the world, and you could do that you could just call it up with your voice, and that would happen. That would have been completely absurd, and you would have been laughed out of the room. And so the idea that we're building a completely new global economic infrastructure, a new infrastructure for how governance happens, for how capital and labor converge and produce things, that is built on the internet, intermediated by software, that's not absurd at all. That seems to me actually quite inevitable. We haven't seen the apps yet that are going to light that up for 1 billion people. I'm still waiting for that kind of crypto super app. But I think, to me, when I look at what sort of happened in these prior epochs of the internet, and I think about the epoch that we're working on here, the impact is probably going to be far greater, because you're dealing with economic and political and social governance and other things like that, which the internet hadn't really been built to do, but crypto as a technology allows us to solve problems in that space.
Brett, come in here. I'm sure you do share their vision.
I do. I think
you wouldn't be doing it.
It's, on one hand, I think it's very difficult to predict the scale and breadth of the applications that crypto will be used for. But I think even if you just focus in on some of the narrow applications that we're seeing start to develop. As we said, we have a lot of the building blocks. We're not quite yet there at global adoption, but primarily access to basic financial services that we basically take for granted in countries like the United States that people maybe have more general access to, but many parts of the world people don't. So examples like being able to store your savings in a form that won't hyperinflate away from you and basically completely depreciate in value in a very short period of time. That's safe, that you can be sure is cryptographically secure, as opposed to could be taken away from you at any time. Things like access to financing, to borrow and lending, is extremely important for societal mobility. So think about everything from someone taking out a loan to get from a paycheck, to someone using a mortgage to buy a home, to a company using debt financing to be able to go public. This is the building block of financial mobility, and many people don't have access to these kinds of services. And so the fact that DeFi and crypto in general has the ability to bring these to so many people in a way that is direct access, as self-sovereignty of money, I think is going to be extraordinarily revolutionary for the global order.
So let's come back to Earth a little bit and talk about the first steps.
All right.
Of course, I know this is like, wow, high level, isn't it? But incredible. I mean, it's very, very exciting for all of you, for all of us. So what are the baby steps, Jeremy, the first steps, in terms of getting business on board or e-commerce?
Yeah.
And that's the area you're in as well. What's happening? What needs to happen?
Yeah, I mean, really, it's interesting. When we got started 9 years ago and we had a vision for what could become possible, we're actually just now 9 years in, just getting to the very first set of ideas that we had. And that was basically a kind of hybrid digital currency model where you could kind of take what we think of as traditional money and make it work the way the rest of the internet works. So you could have a dollar that you could transact and transmit anywhere in the world, that was safe, that had all of these kind of internet superpowers, as I like to call it. And blockchain technology is getting to a point where we have that. And what's needed now is we need that regulatory clarity. So we need, and with that regulatory clarity, and some kind of license for a firm like Circle. We are regulated under the same rules that regulate, say, a PayPal today, but like something that every major household, every major firm, and other financial institutions could say, yes, I'm willing to settle a transaction in this. Yes, I'm willing to take this as collateral. When you get to that point, then you have a building block. You have a very profound building block that a lot of other things can be built on top of. And that's, then the next phase, which I think we're seeing with DeFi, is, this idea that once you have a dollar on the internet, if it's programmable and you can write code and contracts and other things to interact with it, then you can start to really unlock a lot more utility for money. And we're already seeing that. Examples that Brett just gave are really powerful examples that have just risen fairly rapidly in the last couple of years. But we're barely scratching the surface. Yeah. Of what you can do with programmable money. The concept itself is like a very new idea to people. and the number of developers that are actually taking a programmable dollar and doing things with it is really small. But there are a lot of developers that are building apps that program images and files and information and data on the internet. There's millions of them. Now they have a building block of $1 or €1 or other kind of digital currencies that will be out there. So that's a key building block. But having that assurance so that society knows that this is stable, this is secure, it's good collateral, I can always use it, then it can be unleashed into commerce and capital markets and so many other places.
Talking of capital markets, what is the next step? I know that you're making some very big moves, aren't you? Particularly into the futures EFTs. What are the next steps for investors in crypto assets?
Well, I think certainly the holy grail in the U.S. market has been the approval of a spot Bitcoin ETF,
which you've applied for.
Yes, we have applied for today. We run the world's largest Bitcoin fund that does trade in the U.S. already and has for the last 7 years, but it has still not yet been approved by our regulator to become a bona fide ETF on a national exchange.
Are you hopeful?
Of course we're hopeful. The full resources of our firm are behind this initiative. But I think what we're then really talking about is accessibility, right? And to some of the points that Jeremy and Brett are making, it's important that investors have that regulatory clarity that they want, and then the accessibility that they need with the right kinds of disclosures and information that really gives them comfort stepping into a new arena. I think one of the things that we often forget to talk about when we talk about crypto, though, is this idea of trust, right?
Yeah.
And trust is so pivotal to so many different systems that we're talking about disrupting with this technology. And when you look at assets like Bitcoin and others, what you have for the first time is a global consensus mechanism, right? And you're starting to shake up ideas around intermediaries and where and why individuals and businesses inherently don't trust one another and are always interacting through intermediaries, and how we're going to leapfrog over these legacy systems to really have direct connectivity and also have value be shared between, to Jeremy's point, creators and users in a direct way that negates the need to have those intermediaries. So as we begin to shake up a lot of these concepts, you are going to see a whole new wave of economic activity that can happen.
What would you say, Brett?
So I think that we need two important building blocks that are going to be very different in order to get this wider adoption. So I think first is clear regulation. There are many institutions that we talk to every day who won't yet dip their toes into crypto assets because the compliance aspect isn't clear to them. These are, for example, large investment banks in the United States who say until there's a clear SEC or CFTC sanctioned regime for cryptocurrency exchanges and the trading of them, the custody of them, that they can't really yet make that happen on their balance sheet. And so I think that's one. We really need that institutional involvement to let the asset class mature in a proper way. The second is and this is things that we're all working on, we really need to make the entry points into crypto as easy as possible. So imagine, for anyone in the audience here who would like to participate in some sort of, DeFi yield, what do you have to do? You have to, sign up for an exchange account and then deposit dollars, maybe buy Ether, then set up a MetaMask account and then do a withdrawal and then wait some number of minutes for that thing to settle and then, hook up your wallet on a Chrome browser. We're already 20 steps too far from something that's going to be easily adoptable by 1 billion people. So to the extent to which we can make apps as easy to use as possible and to hide a lot of that complexity, to Jeremy's earlier point, when you send an email, no one's thinking about, we're using HTTP and you're using SSL and this form of encryption. You just send an email and everything behind the scene is taken care of for you. We need to get to that point in crypto before we'll reach that mass adoption.
Well, talking about mass adoption and participation, I think this is a great time to open up to questions from our audience. Because I know there are going to be lots of very interesting questions of people who've got something to say. This is an opportunity to ask some fantastic questions about crypto assets. A gentleman at the front. Congratulations, sir, for being our first participants. You are very brave. Can you tell us your name as well? That would be great.
Hi. So my name is Nimsi Radhan. I used to work as a CTO of GSR, a crypto liquidity provider.
So I'm just going to stop you there because we can't hear you very well. Do you mind just standing up? Only because I'm not sure if the microphone's working, but if you stand up and kind of project,
can you hear me now?
it'll be better. Yes.
Sorry.
Hi.
So I was the CTO of a crypto liquidity provider, so I've been in the space for a little while, right? My question is around central bank digital currencies. Do you see this as a risk to crypto in general, or do you think that's something that's going to help this unlocking this growth and adoption in this space?
And who's that? To everyone?
Well,
Yep.
to the panel in general.
Jeremy, do you want to start?
I'll start, sure. I think, we have a few different perspectives on this. As sort of the largest regulated dollar digital currency in the world, we have an opinion. But I think, generally, when you think about electronic money in the world today, at least in the West, pretty much every form of electronic money innovation has been driven by the private sector, whether that's the electronic messaging wire system, what we think of as checks, check clearing, ATM machines, credit cards and debit cards, PayPal, Apple Pay, stablecoins. All of these have been innovations that have come out of the private sector. A lot of times, eventually, you need some standardization for interoperability and things like that, and that's really important as well. But fundamentally, the Federal Reserve didn't decide, I'm going to build mag-stripe systems and cards and distribute them to everyone in the economy. I'm not going to build a network of physical machines to disperse cash. So all these different innovations have come out of the private sector, and I think that's worked really well. As long as you can safeguard the underlying assets, as long as the central bank has the ability to project an interest rate or things that allow for contraction and expansion of the money supply, I think those are probably the highest, most important things. When people talk about central bank digital currencies, they're sort of, is there a better way to support cross-border payments? Is there a better way to have more financial inclusion? Is there a better way to do more real-time payment transactions? Is there a way to compete with China? Is obviously a thing that comes up in this context. And I think there are answers to those questions, and the answer is unleash the open internet, unleash the creativity of entrepreneurs, unleash technological innovation cycles. And I think what you'll find is that private industry and open source technology, which is really what a lot of crypto is just moving at a blistering pace. And so that's, we raised this question, is the US winning the digital currency space race? And the answer is yes, because the dollar is the preferred digital currency of this whole landscape. And it's growing faster than anything else. And there's trillions of dollars of transactions happening in it already. And in the coming years, that's going to be tens of trillions. And so it's by competing with the open internet and private sector activity, put some regulations around it, that's what's going to be necessary. By the time the federal government got around to a long-term R&D project, they've been working on FedNow, for example, for, 8 years. And so I think people have to get in focus what's actually going to lead to solving the ultimate problems that are identified as being solved by something like that.
Brett?
Yeah, I agree with everything that was said. I think that there's a way for CBDC to be created that would be working harmoniously with the private sector stablecoins, and there are ways for it to effectively, shadow ban private sector stablecoins. The latter, I think, would be a serious detriment to the development of crypto asset economy. The former might be very advantageous to existing systems, but you have to start by asking the fundamental question of what is the point of a CBDC? What are you trying to solve? If you're trying to solve better interbank instant settlement money transfers, then there is FedNow, and we can complete FedNow, get that rolled out everywhere, and you don't really need distributed ledger technology for that to exist. If there are other applications that it would be useful to have a blockchain behind such a thing, then we could create one as long as we're not going to stamp out all of the great innovation and progress from private sector stablecoins.
Michael?
Both gentlemen make excellent points around this. The only thing I would add to that is that there's often a question, and I think this is getting to the heart of your question, which is that if CBDCs continue to be developed and ultimately are launched, does that spark the downfall? Does that spark the death of Bitcoin and all these other open source protocols? And our opinion is actually quite the opposite. We think that if in fact there is more enhancements made around the use cases and usage of and ability to access any of these digital instruments, it only will create a tailwind around the interoperability and ability for investors to access assets like Bitcoin and other crypto assets. That being said, philosophically, what also is important about this is that the rise potentially of CBDCs will actually shed additional light on some of the things that we're talking about, which is things like open source protocols and the idea that money is what society dictates that it is. And so I'm certainly not looking out to some utopian future of fiat currencies entirely going away and we're all just using Bitcoin and Ethereum and all these other assets, but instead an even greater appreciation held globally by everybody of the differences between the governance structures and mechanisms that underpin what would be a CBDC and what does underpin things like Bitcoin today.
So thank you for a great question. Let's have another one, please. Oh, lady at the front, fantastic. We'll get a microphone, and there's a microphone coming right now for you.
Hi, I'm Hannah. I'm a Norwegian technology entrepreneur. My question is, we've seen countries and governments talk about the principle of basic income without having that happen. And is there a way for the exchanges or the industry of crypto to basically give basic income to people? And if so, I'd love to work on it. But the distribution of wealth, basically, if there's a model that we can work on that would make that happen.
And who's your question to? Everyone?
The one who feels the calling to it.
I'll take that to start. So our FTX US headquarters is based in the city of Chicago. And we have been working with the mayor's office in Chicago on exactly this. So in Chicago, they recently announced the launch of one of the largest publicly funded basic income experiments in the city. And we are actually supplementing that with a similar, not a basic income, but a cash assistance program of our own, where we're working with a great nonprofit organization called Equity and Transformation in Chicago to give a basically monthly payment to a select number of Chicagoans, along with access to the FTX app and the FTX debit card, and basically access to a free bank account and financial services that these particular people basically don't have access to because of situations that they're in the city. And so we understand that the concept of basic income right now is not a universally agreed upon thing that we should implement, but I think enough policy debate is happening now where people are starting to run these experiments so we can actually see if they are beneficial, which we believe that they would be, and we want to be able to assist in the sort of distribution of that basic income along with the financial services required, because many people don't have access to either banking services at all or good enough banking services that they could even make use of such a basic income. For example, minimum account fees or check overdraft fees. And so we're pretty excited about our participation in that project.
I'd add a couple things. So we have an initiative called Circle Impact, and it's a social impact initiative. We're doing a number of different things in that. One of those is really around the use of stablecoins, in our case USDC, as a way to do aid distribution. And so in a world where you can just distribute digital dollars over the public internet and someone just needs to download a digital wallet app, it could be the FTX app, but download a digital wallet app, there's hundreds of them, and they're in every app store, in feature phones and Android phones, in every geography in the world. There's now a really, increasingly very, very efficient way to move value very inexpensively to people. And so I think we're not quite there, but I think in the very near future, going beyond just aid distribution, I think this can be income distribution. This can be a mechanism. And with blockchains, you have this kind of interoperability, and you have the ability, again, anyone, anywhere in the world, just with a piece of software, to now be able to have funds directly distributed to them, to take direct self-control of those funds as like a digital cash-like instrument, which is really important as well, especially when you're dealing with underbanked or unbanked people, and give them the ability to then participate economically in the digital economy. So I think we're not there yet. There are some gaps in terms of making this work, but I think the pipes, in a sense, just like you could message to anyone as long as you get a SIM card, right? There's certain things. There are still sort of digital divides, but I think we're approaching that point, and so the mechanism is going to be there to be able to do more UBI type initiatives using cryptocurrency and digital currency technology.
Would you like to add anything, Michael?
I think Jeremy's making a really good point. I think sometimes when people look at this kind of an issue, they're often looking at the lack of internet access around the world and often overlook the fact that even with just simple feature phones, accessibility to crypto is not only possible, it's happening all the time. And so if you think about what's happened in the developing world and cellular technologies took off so much faster than landlines because they never had the infrastructure than it did in the developed world. I would say that, as Jeremy's talking about developing those building blocks and those stepping stones, the fact that we have billions of people connected around the world with, these little plastic devices, that certainly can be the springboard to financial inclusion, things like universal basic income for sure.
Thank you. Fantastic question. And the lady at the front, tell us your name. That'd be awesome. Thank you. I think it's on. Have a go. Is it on?
Hello?
Yeah.
Hi, everyone. My name is Svetlana, and I represent psychology and mental health. So today we're talking about future of cryptocurrency, right? And my question is actually about the past. So when you guys all started and when you just stepped into cryptocurrency industry, what is the 3 bullet points you've been driven by? And what will be your advice to young entrepreneurs to keep drive and build new companies?
What a
Thank
great
you.
question. I love that question.
I will, I'll give my one anecdote and let these guys probably say something more intelligent. In 2014, I met my founder, a gentleman named Barry Silbert, and he told me that Bitcoin and the development of this asset class was going to change the world. And in my entire life, I had never heard in a personal setting, academic setting, anything of anyone being bold enough to say that something had the potential to change the world. And today, 8 years into that journey, I personally have not looked back once, and I do believe a lot of the topics we've touched on today are in fact going to be realized in a way that does fundamentally change the world, much the same way that the internet has. And if that in and of itself isn't motivating enough to take that leap and get into crypto, I'm not sure what is. But certainly a lot of what we're doing is breaking ties with legacy systems and really helping to evolve a lot of that into the future.
So I'll say that before I got to FTX, which is around only a year ago now, although it's been a long year, as we've discussed, I was within more traditional financial firms. So these were proprietary trading firms. They were all very secretive and very competitive with each other and never could really discuss openly what they were working on because all these proprietary secrets. And then I came to crypto and everything was completely flipped on its head for me. Everyone's on Twitter talking about their newest company, their idea. Even direct competitors are investing in each other's companies. I think my advice to entrepreneurs in general is find yourself in an ecosystem where people are supporting each other and talking openly about what they're doing. They're publishing open source. They're creating a interconnected economy. That's a world in which you can thrive and not one in which you're only thinking about competing. And crypto right now is certainly a world that I think matches those characteristics.
Totally agree.
Yeah, I mean, I came to this about 10 years ago and got really obsessed with the possibilities. And for me, it was just, I had spent the prior 20 years working on building blocks for internet software, internet infrastructure. And you could kind of see the kind of kernel in Bitcoin at the time of a new technological, economic kind of paradigm. And for me, I could just sort of see a lot of the same patterns kind of playing out, and that this was going to be something that probably would take 10 or 20 years, but the impact would end up being far, far greater than the web. And so I had very high conviction about that, and just as a technologist by background, could really see how those technical building blocks could work. And there was a lot of skepticism. I mean, even today, there's still a lot of skepticism. Let me tell you, 9 years ago, I couldn't get meetings with an accounting firm because they're like, if we take a meeting with you, we might go to jail or whatever. Literally, it was a very different universe 9 years ago. But the advice as a result is, if you're going to get into this space, you are going up against a lot of very big established power structures. You are challenging them. you are looking to change them. You're trying to build a world that operates differently, and you will face intense resistance. And so you got to have a thick stomach. You have to be strong about your conviction, and you just have to deal with the fact that everyone's going to tell you you're wrong, and everyone's going to tell you that you're going to fail. And you have to keep motivated in the face of that, because I still get that every single day. And we're 10 years in. I think we got another 10 to 20, and then maybe we can all look back and have a chuckle.
and a margarita on somewhere, a nice beach somewhere. Do we have any more questions? Are we gentlemen at the front, and then two? I think we're two more questions, and we're going to have to wrap up, I'm afraid. So the gentleman at the front here.
Thank you. My name is Andrew Fisher. I want to talk about the topic of the tokenization of everything, and then also the tokenization of various financial assets. And I know that at the global scale, it's much more difficult to tokenize financial assets relative to tokenizing assets within borders. And so I'm curious what that looks like. And I'm thinking global assets in the sense of commodities, in the sense of foreign corporations that are looking to list on US exchanges in the synonymous nature. So what does that look like? And I'd be curious to hear from an infrastructure perspective, an exchange perspective, and then an asset management perspective.
All briefly as well, I'm afraid.
Can I take one piece of this, and which is to say, technology is not the hard part. The technology for this is trivial. It's really about like corporate law and the frameworks, the legal frameworks and definitions, and who's allowed to do what. I think you could very easily have tokenized real estate or housing stock and property in the entire world could all be tokenized and tradable and investable and could exist and financeable. All that could happen, and I think it should. And I think the issue here is we need major breakthroughs in how governments think about the inherent global nature of property and how property is represented and how property can be transacted and financial instruments interacting with it. We've gotten there with communications. We've gotten there with information and data. We've gotten there in a lot of places. We have to get there with assets. But to me, it's almost all legal, definitional, and not technological.
Brett?
Yes, very quickly, I just completely agree. I mean, from an exchange perspective, you have requirements around which customers you can take and where things have to settle. There might be implications in foreign transaction taxes. There might be implications about OFAC sanctions. There's so many different areas of either law, policy, tax, regulation that come into play when thinking about sort of global settlement of financial assets. And so that's the hard part. I mean, it's already the case that Bitcoin settles everywhere. It's really just about the policy.
And briefly from you, Michael.
I'd say don't hold your breath. I think that I'm excited to see the tokenization of things that should and can be tokenized that will create some level of efficiency, transparency, cost savings, et cetera. But we do not need to move to the tokenization of everything. And when we do move to the tokenization of some things, and you're able to take a breath, I would say that you're going to certainly hope to see it done in things that are creating solutions for problems that exist in the world today and not the other way around.
Okay, I know there's one more question, but I'm so sad we're not going to get to it, but I'm sure the gentlemen won't mind you coming to talk to them if you've got 5 minutes or so after this session, because we do want to make sure you all get your answers or your questions answered. But would you just join me in giving a really big round of applause and a thank you to Jeremy Allaire, Brett Harrison, and Michael Sonnenshein. Thank you. It was really good. Thank you very much.